Good morning, everybody. How we doing today? Welcome to, Wednesday, January 5th, 2022. Glad to have everybody here. Are we ready? Big Fed day. The minutes will come out around 2 p.m. Eastern, I believe it is. So with all that, I've made a few new rules or updating rules, and it's just a good time of the year to really nail down your trading strategy and get rid of some of the bad habits, let them go wash them off. And one of the things that I'm going to try really hard to do is eliminate risk. It's going to be one of my big focuses for 2002 is putting risk aside. And sometimes that means not trading, and that's not the only answer to eliminating risk. But here we have a day at 2 p.m. where the Feds may raise the rates, or which, I don't know. I guess that's sort of a done deal maybe. But there might be some wording in there. There might be something that the market does not like, or maybe the market loves. So to me, it would be extremely risky to be short on the market, because maybe the market likes it. Who knows? Or maybe the market doesn't care. And on the other hand, we don't know if it's going to move to the upside. So to me, this is risk, not knowing this little piece of information here. So I can eliminate this risk by not trading as much. And that's what I've done so far this year. Just haven't done anything last couple days. Just kind of waiting for this Wednesday to get by. So I think I can manage to handle another day. Now, that doesn't mean I'm not going to put a trade on today. Certainly might. But it does mean that I'm going to walk very softly, like there's thin ice up here. And I just don't know when the ice is going to thicken up. So I'm going to keep an eye on that. If I take a look at this SPY chart, just the SPY chart, I have to be bullish. There's just nothing about this chart that suggests any bearishness right now. In fact, it's doing what we love for a chart pattern, where it rallies up and just moves sideways. That is beautiful to me. After we've broken out, like I say, we just got this doggone Fed minutes coming out at 2 p.m. today. And, we don't want that. I don't want to be in that choppy state. So anyway, that's how I feel about the market so far. The VIX here showed no real fear yesterday whatsoever. We're still under the T-line. The T-line is still under the Trendicator. No fear on the VIX at this point, at least the close yesterday. We'll see what it looks like midday today and then toward the end of the day, but right now, nothing at all. I've got two watch lists up here. One is hot and active, meaning pre-market. You can see there's some oil stuff popping up. I'm not going to talk about them because they're already on a previous watch list, that I put out every day. So, but I do want to bring, some of them up. Look at MPC acting absolutely terrific. I just saw MRO flyby right here. Just popped up. MRO is doing great. So a lot of oils might be right in that pocket for some folks. I just saw USO. So you can see there, nice trend, 3/8 trap. That's what I've got this set at. Looking for a 3/8 trap or breaking out of a 3/8 trap. And it's just oil stocks. And you can see that USO is doing good. Let's look at VLO, and that'll be the last one there. So here's VLO. Nice move up. What a beautiful place to have bought VLO right here. And that would have been a perfect 3/8 trap setup. All right. Let's take a look at some charts that I am adding to the watch list today. There are a couple of them that might be on that watch list. But here's what we're going to take a look at today. So SYK yesterday broke out of this downtrend line here quite well. Acted really good for those that are volume watchers. Really nice volume yesterday as well. it looks like we're opening up on an inside day. This is a nice little JHook setup. And as you all know, a JHook setup is it's a continuation pattern is what it is. So if we go from the what makes the JHook setup or the continuation pattern is right here and then down and back up, and then we're looking for that breakout and then that continuation, and here's your J. So it's just like a cursive J, you know, just a J like that. There it is. Some people call it a fish hook. You can call it whatever you want. Cat jumped over the moon, or maybe that's the cow or something. I don't know. Bottom line, it's a continuation pattern. And when we see something like this, this is what I want on the watch list. It doesn't mean that today is the absolute entry. It means I want to shop for an entry. I want to wait for the best opportunity for me personally. Dean there may see a different opportunity. Mela could see a different one, and JB could see a different one. Those are folks I can see in the room right now. So, you know, some folks are going to wait till it pulls back. Some folks are going to wait till it breaks out. I think the big key here is, where do you think it can go? Where do you think it could go? And that's what we want to look at, where we think it might go here. So I did this yesterday. We'll do it again today. And just, you know, I'm going to use these. I switched to a weekly chart just to crunch it up a little bit. And you could probably take it from anywhere in here and just go up to those highs if this is, you know, how you want to do. I'll show you the second way to look for targets. There's one way. Now let's go back to the daily chart. Well, there's some possible targets right there. Now, since I am a chart pattern trader, a candlestick trader, price action trader, I'm just going to put a line up there. That's as good as it gets. And from there, I'm going to follow price is what I'm going to do. Another one is JB Hunt. So you can see JB Hunt's been trending up here. We'll put a line in there like that. Nice little trend. And let's come in here and put a line where these candles topped out. We have a hump, a hump, a hump where it just stopped, stopped, stopped. I guess there's a stop right there as well. And then from there, the bulls found a reason to buy it and then popped it up, and now we're pulling back and testing. And if you look at this chart, there's another one of those JHook continuation patterns right here. So this is where following the T-line really, there's not this. There's several places where I think the T-line rocks. And when you get a chart that's starting to trend above the T-line, we call that a T-line run. And you can see here it started here and it's still a T-line run. Right there, maybe negated that. I don't think so though, because if we go back to this candle, I think the T-line was still under the close. It's this candle here that brought the T-line up, crossing through that candle. So this to me looks like still a T-line run, a bullish JHook continuation pattern. Again, it's just simply a matter of each individual trader deciding your entry point, your pocket. And this is what's so important to come into the hit run candlesticks room or the right way options room and, you know, learn how you can do that and, you know, help work that out for yourself, because everybody's going to have a little different view of it, and you need to find out your view. That's what's important. So, hey, good morning, Hector. How are you? Chubb, Paula, how you guys doing? So you can see the beautiful JHook continuation pattern setting in there. We'll look for more upside there. IPG is another nice looking chart, another one of those JHook continuation patterns. Here's the overall trend is moving up. Here is the JHook setup that I'm looking at. It's just a continuation pattern. It's just a pullback. We call this a PBO, pullback opportunity. And what we like to do for our buy area, our pocket, where we're willing to spend money, is in the 3/8 trap or a breakout of the 3/8 trap. I like both of them. Both of them are good to me. I like them both. And I don't feel one is any better than the other, because you're going to put your stop based on the price action from where you bought it. So what does the chart look like? An example is if I was to buy IPG right here, my stop would be in the neighborhood of 37.50, something like that. If I end up buying it up here, well, that would be a breakout of these candles here. So my stop would be about that breakout point. I don't want it down here, because that would mean that we failed the breakout. We came back through the breakout and we actually got into a little bit of a downtrend here. So either place, right in here or that nice little move up. So yesterday we ended up with what could be a little bit of shooting star here. It could be, absolutely. We could totally fail here. This is where the scanner comes in. I'm going to put it on the scanner. When I see the buyers stepping in, then that's where I may look to buy that. And if the buyers start stepping in, this is what it's going to look like, just like that. And that's what I want to look at for a buy. Another one is DRI. I think DRI, I don't know why I have all of those lines down there. There we go. DRI might be setting up here. So I think what we need to do is draw a line like this right here. And then we're going to draw a line right here. We're going to call that a double bottom, close enough for government work. And we're going to go from this low to this high. We're going to go down to that low. Can you see the JHook continuation pattern in there? Beautiful. We broke out of the downtrend line. This is also, for those familiar with a pop out of the box, I'm not going to go into great detail on this one. But for those that are familiar with a pop out of the box, that's what you have right here. Nice little pop out of the box setting up. You can see you've got a T-line run setting up. T-line run, it's like a trend. T-line run is a trend with price staying above the T-line. Remember, the trend is your friend. The trend will stay a trend until it's no longer a trend. In this case, we'll be using the T-line for a trend. XLI, fantastic candle yesterday. So what I want to do is look for the continuation off of yesterday. We're going to look at that double bottom right there. We're going to look at that rally up. This one broke out through the 50 period moving average, came up and tested those highs right here. And you can see we pulled back. We've got that continuation pattern right in here. This candle right here is pre-market. I don't put a ton of weight in pre-market candles. If that's where it opens, then, and hangs there for a minute or two, even for the whole day, what you would have is a doji continuation pattern setting up off of a JHook continuation pattern. Now, we're going to put a line right here, and that could absolutely be resistance. For some traders, they don't want to mess with that. Some traders would rather us break out, and that's where they look to trade. Enter this. Other traders are looking at it right now. Once again, there is no perfect stamped out way to trade. There just is not. There are absolute rules that we can put in place, and I mean there are some good rules to put into place. But when it comes down to it, in the end, there's a certain amount of you that has to trade. And you've got to decide, is it better risk here or better risk here? This is something, again, HRC, RWO, we cover this on a daily basis in the trading room. MT is another one. Look at that JHook setup. A lot of JHook continuation patterns setting up here. And the reason I'm only looking at bullish charts today is because the market is bullish. I'm not going to predict how the market is going to act toward the Fed news today, because that would just be the sign of a rookie, somebody that really didn't know what they were doing, to be truthful with you and to be harsh about it. You can't predict on these things because no one really knows how the market's going to act. I would suspect just from history that we see a lot of choppiness, and then the market, tomorrow is when we see what the market might really be thinking. So anyway, sorry, off track there. Bullish JHook continuation pattern. Here's your downtrend line. We're breaking out of that today. We're right at it yesterday. So what I'm looking for is a nice little entry in here, and then see if we can't make some money to the upside. So what if it doesn't do that? Well, first of all, I haven't bought it yet. And second of all, if I do, thank goodness they make stops. And if we don't adhere to our stops and keep our losses small, that is another major focus for me this year, well, you know, that's on you. That's strictly on you. And yeah, I could talk all day on that one. TTW, and I mean you as the trader. I'm being a little bit barky today. I apologize. Well, not really. I don't. The fact is, there are people out here trading with a bucket load of money. There's people out here trading with a small amount of money, trying to make money. And I think they need the best shot they can get. I think they need the fairest chance they can get. And going out there with all the BS of making 300, 400, 500%, and that is true BS. Because that's all you ever hear from some people. And good Lord, you think they ever have a loss? It doesn't seem like it. And see, that's unfair to people just starting out. It's unfair to people just starting out to tell them that not everything is about making money. You control your losses, and I'm pretty sure you'll make money. Finding these charts is a whiz-bang piece of cake. I do less work now than I ever have in my life trading, because I've quit trying to be all fancy-pantsy about charts. Just look at simple, easy chart patterns and follow price. Any one of these charts are just a piece of cake to find. That's a one-day coaching class, and you got it. The problem is what's between our ears. We look at something like TTWO, we buy TTWO, and for whatever reason, and guys, I'm talking about me here too. For whatever reason, it doesn't work out. But you know what? Well, I'm going to hang on to it, yeah. And it doesn't work out. Well, I see support here, so I'm going to hang on to it. So now you've got yourself a, I don't know, $1,500 loss maybe. Do you have any idea how many bullish trades you've got to make just to cover that, much less make money? Control your losses. The rest of it will fall into place. Sorry, I get excited here in the morning. I'm a morning person. FCX, another one of those bullish JHook continuation patterns. Absolutely the best chart pattern in the world as far as the overall price action pattern goes. So let's do this. See how we've broken out now? The bulls are in charge. Now we rally up. Here we pull back for that JHook continuation pattern right there. Perfect. Now it's a matter of deciding where you want to put your entry. There's inside the 3/8 trap. Here is a breakout of the 3/8 trap. What trips your trigger? Or maybe, I'm not going to trade anything until the Feds are finished. I don't know. You decide. What is your game? Woo! Okay. Hey, that's it here, guys, gals. Thanks for being here. So, yeah, let's leave it at that. I'll see everybody in about 20 minutes. Market will be open. Thank you very much for being in the trading room. I appreciate it. And we'll see everybody. You guys take care. Thank you.